discussed the problem which we have discussed in the previous class, you have worked out and you have understood. Today let us continue with some more problem for preparation of statement of profit and loss. So here I have one problem relating to the preparation of statement of profit and loss. They have given some information for that. By considering all this, we need to prepare the statement of profit and loss. Let us look into the problem. The following information related to Pratap Limited for the year ended 31st March 2024. Always I was mentioning that whenever there is a name of the company provided, then you should have to write down. So before writing the format of statement of profit and loss, we should mention the name of the company. So here the company name is Pratap Limited. Pratap Limited has given this income statement, the information. So by using this information, we need to prepare an income statement. That is to be prepared for the year ended 31st March 2024. Let us see what are the informations they have given. First item is sales. Sales, it is 2 lakh rupees. Purchases 1,40,000. Opening stock 2,20,000. Closing stock 2,80,000. Where we have to take these three items. See, purchases, first we have to take opening stock, then add purchases. If there is any direct expenses should be added, and closing stock should be deducted. To calculate what? This we use to calculate cost of goods sold. Okay. Then the sales, this is the first item of preparing the income statement. So there is a sales return of 80,000. This sales return of 80,000 must be deducted from the sales value. I'm sorry, it is not a 2 lakh, it is a 20 lakh rupees of sales. 14 lakh rupees of purchases. Opening stock, it is 2,20,000. Closing stock 2,80,000. And sales return, as is mentioned, it is 80,000 should be deducted from the value of sales. Next, further they have given selling expenses. Where do we have to consider this? As we all know, after deducting this cost of goods sold from the sales, we will get a gross profit. From the gross profit, we need to deduct operating expenses. So what are the operating expenses? Cost of goods sold is nothing but it is called as factory expenses, and all other expenditure, that is office and administrative expenses, selling and distribution expenses, research and development expenses, all are called as operating expenses because those expenditure will be incurred to meet the day-to-day operational activities of the business. So the selling expenses such as salaries, advertisement, traveling, so these should be considered as an operating expenses, and like also administrative expenses such as salaries, rent, postage, stationery and postage, depreciation. Actually this depreciation will be deducted separately after calculation of EBITDA, EBITDA. So separately we will deduct this depreciation or amortization. This will not be directly taken as operating expenses. Why? Because this depreciation is a non-cash item. Since it is a non-cash item, no amount will go outside the business. Only this amount, the depreciation amount, will be kept aside in the business for meeting the future needs of replacing the fixed asset, or if there is any repairing of fixed asset. For that, this amount of depreciation will be adjusted. So no expenditure will be incurred. This is a fund which is set aside. So this is a non-cash or non-fund item. By considering that, this will not be considered directly as an operating expenses, but this will be deducted after calculation of after deduction of operating expenses. And this other charges, since other charges is also an operating expenses. So that means what are the operating expenses here? Selling and distribution expenses. Then office and administrative expenses other than this depreciation. Other than depreciation, all other administrative expenses will be taken as operating expenses. Whereas here look into the provision for taxation. This provision for taxation is also not and operating expenses. This will be deducted after calculation of EBT, that is taxable profit. Okay. Then further they have given non-operating income and non-operating expenses. So directly they have mentioned dividend received, profit on sale of fixed asset are called as non-operating income. As in the previous class also we have discussed with the same items. Then we have loss on sale of shares called as non-operating expenses. Okay. With this information we need to prepare in income statement, nothing but statement of profit and loss. Let us calculate and prepare the statement of profit and loss. Let us give a heading. Okay. So the heading should be the name of the company first, that is Pratap Limited. Pratap Limited, and here we are preparing the statement of profit and loss. So statement of profit and loss, for the year ending, 31st March 2024. Okay. So this is the heading we have to write before going for the format. So the format is with 2 amount column and 1 particulars. This is called particulars. This is amount in rupees, Okay. Let us take one by one. The first item of profit and loss statement is sales. Let us take that sales. The amount of sales, it is 20 lakh. Why I am writing this in the inner column? Because there is an adjustment for this. The sales value must be deducted from the sales return. Sales return they have given, that should be deducted. So less sales return, the amount of sales return is 80,000. So take the total to the outer column. 20 lakh minus 80,000 is 19 lakh 20,000. Okay. Next, this is called as net sales. Then we have to deduct cost of goods sold from this. So deduct cost of goods sold. So directly cost of goods sold is not given. We have to calculate. How to calculate this cost of goods sold? So we have to take opening stock plus, take the opening stock. What is the amount of opening stock? Opening stock is 2,20,000. 2,20,000. Add purchases. The amount of purchases, it is 14 lakh. If there is any purchase return, that also we have to adjust, since here there is no purchase return and also no direct expenses. So I am taking the total of this. Opening stock of 2,20,000 plus purchases 14 lakh, it is 16 lakh 20,000. So now let us deduct closing stock. What is the amount of closing stock? Closing stock is 2,80,000. Balance, let us take this to the outer column. So the difference is 13,60,000. The difference of this is 16,20,000 minus 2,80,000 is 13,40,000. So let us deduct this sales minus cost of goods sold. If you deduct this sales minus cost of goods sold, then the balance is called as gross profit. The balance is called gross profit. Okay, so let us take the difference of this. 19,20,000 minus 13,40,000. So the differences of this is 5,80,000. This 5,80,000 is a gross profit. Let us deduct operating expenses from the gross profit. If you deduct operating expenses from the gross profit, then we will arrive for EBITDA, EBIT, So let us deduct operating expenses, So there are so many operating expenses like selling expenses, administrative expenses, etc. Let us take one by one. First one is selling expenses. So under selling expenses, we have first item salaries. Let us take this to the inner column. The amount of salary is 3,60,000. 3,60,000. Okay. Next is advertising. The advertising is 14,000. It is 14,000. And for the traveling expenses, let us go for the next page. The traveling expenses, I will continue. The traveling expenses okay, the traveling expenses, it is 10,000. Next, also we have administrative expenses. Let us take that. Administrative expenses, continue with the same. This is not advertising, sorry, administrative expenses. Under administrative expenses, we have salaries 60,000. Salaries 60,000. Next, rent 12,000. And stationery, postage, etc. It is 4,000. Stationery, postage, etc. This is 4,000. Next, we have depreciation. As I said, depreciation will not be considered directly as an operating expenses. So I am not considering that depreciation 20,000. So we have other charges of 40,000. Let us take that also as operating expenses. Other charges, it is 40,000. Okay. So all these are the operating expenses. We have to take the total of all these operating expenses. Let us take the total. Okay. We have salaries of 36,000. It is 36,000. Okay. So salary is 36,000. Then 14,000 of advertising. So 14,000 of advertising plus salaries, it is 50,000. 50, 60, 120, 1,20,000, 1,32, 1,76,000. So let us take this as a total of operating expenses. 1,76,000. 1,76,000 is an operating expenses. Let us deduct this 1,76,000 from the gross profit of 5,80,000. So 5,80,000 minus 1,76,000 is called as 5,86,000 minus 1,76,000. This is called as EBITDA. So we consider this as EBITDA. So the difference of gross profit and the operating expenses, that is gross profit 5,80,000 and the operating expenses 1,76,000. The difference is 4,04,000. This is called as EBITDA, EBITDA. Let us deduct depreciation from this. Less depreciation the amount of depreciation is 20,000. Okay, so the balance, the difference from this EBITDA and the depreciation is called as operating profit. Operating profit is also called as EBITDA, EBIT, EBIT. EBIT is nothing but earning before interest and tax. This earning before interest and tax is also called as operating profit. Operating profit. Let us take the difference. So 4,04,000 minus 20,000, it is 3,86,000. 4,04,000 minus 20,000, it is 3,84,000. 3,84,000. This is operating profit. Let us deduct this. Let us add non-operating incomes and deduct non-operating expenses. The balance what we get is called as EBIT. The balance will be EBT then. So now let us add the non-operating income. Non-operating income. Non-operating income, we have two items. One is dividend received of 2,40,000. It is 24,000. Dividend received. Dividend received 24,000. And profit on sale of fixed asset. Profit on sale of fixed asset, it is 1,20,000. So total is 1,44,000. So now we have to add this to the operating profit. So if we add, we will get 5,28,000. So now for this we need to deduct non-operating expenses. Non-operating expenses. The non-operating expenses, we have only one item here, that is loss on sale of shares. Loss on sale of shares, it is 6,000. So this loss on sale of shares, I'll take directly to the outer column because there is only one item. So if we deduct this loss on sale of shares of 6,000, the balance is called as 5,22,000. This is called as taxable profit and it is also called as EBT. This EBT is nothing but earning before tax and it is also called as taxable profit. Now from this taxable profit, we have to deduct one item. There is one item which is left out. We have considered depreciation, other charges as well, but only one item which is left out here. So this is provision for taxation. So if we deduct provision for taxation from this taxable profit, then the balance what we get is a net profit or earning after tax. Okay. So let me write that EBT. EBT is nothing but taxable profit. The amount of taxable profit which we have calculated is 5,22,000. So now 5,22,000 minus provision for taxation. So the provision for taxation is 1,40,000. So let us deduct that 1,40,000. The difference what we get is called as EAT, nothing but earning after tax, and it is also called as net profit. This is also called as net profit. So the difference from this is 3,82,000. So 3,82,000 is a net profit. So with this information we have prepared statement of profit and loss. Hope you have learned to prepare the statement of profit and loss. Still we will have an adjustment. So actually only preparation of income statement usually will not be asked. So you will be asked to prepare both income statement, that is statement of profit and loss, and as well as balance sheet. So why I have solved these problems? Because to make you understand that how to prepare the statement of profit and loss. Now further in the next class let us discuss about the balance sheet. Okay, how to prepare the balance sheet, and also we'll work out some problems. Hello dear students. In the previous class, we have discussed with the preparation of statement of profit and loss. Today, let us discuss that how to prepare a balance sheet and what are all the items will be considered under the balance sheet. As we all know, balance sheet is one of the very important form of financial statement where every business will be preparing the financial statement to know mainly the two items. One is the profitability position and as well as the financial position. So this statement of profit and loss will be prepared to know the profitability position of the business, whereas the balance sheet will help the stakeholders to know the financial position of the business, financial position of the company. So let us learn today that how to prepare the balance sheet and what are all the items will be included in the balance sheet. So earlier to the Companies Act of 2013, we used to prepare the horizontal format of balance sheet where we used to have the left side liability and the right side assets. But now we don't prepare the horizontal format of balance sheet. Instead, we prepare the vertical format of balance sheet considering the same items of liability side once and the asset side next. Okay. First we will take the liability side of the balance sheet, and next we will go for the asset side of the balance sheet. Usually this balance sheet will be prepared in two ways. One is based on the order of permanence. The order of permanence, like how to prepare the balance sheet. So order of permanence, and the second one is order of liquidity. Order of liquidity. Usually in India we follow the order of permanence. What do you mean by this order of permanence and the order of liquidity? Order of permanence in the sense how the long-term assets or the liability will be taken first, because they will be the long-term liabilities and assets kept as a permanent. Okay, for a longer period. So whereas here on the order of liquidity, the assets or the liabilities which will be considered for a short period called as current assets or the current liabilities will be taken first. Okay, but as I said, in India we follow this order of permanence. That means long-term liabilities or the assets will be taken first, and next will be the current assets or the current liabilities. Let us discuss about the format of preparation of balance sheet. Okay, so the format for this is, first we need to mention the name of the company. Say for example it is XYZ Limited. So we will mention the name of the company, and next is balance sheet. the statement of profit and loss we will prepare at the year ending always, for the year ending. That means by considering all the items for the whole year, starts from 1st April till the 31st March we used to consider, we will consider for the whole year, and that will be prepared for the year ending by considering all the informations for the 1 year. But this balance sheet will not be taken the whole year information. Always the balance sheet will be prepared as on the date. So we say as at or as on 31st March, which date? It can be 2024, 23, 21, whatever it may be. Always this will be prepared as on, not for the year ending. So while mentioning, we should always be careful to mention this balance sheet as on, not for the year ending. Okay. So this is the heading we have to mention. Then the format will be same as usual, that is 2 amount column. Okay. So 2 amount column we will take 1 particulars. So this is particulars, and this is amount in rupees and amount in rupees. Okay. So this is the same format, the vertical format we consider, particulars and amount in rupees. But for the balance sheet, actually the first and foremost schedules or the items we take is the liability side. So what includes here under liability side? First item of the liability side is always the shareholders fund. Okay. So the shareholders fund will be the first item, since it is a long-term assets of the long-term liabilities of the business. As I said, this balance sheet will be prepared and the order of permanence, the long-term liabilities will be taken. So let us give a heading for this: equity and capital. Equity and capital. Under this, the first item is shareholders fund. Okay. What does this shareholders fund includes? This shareholders fund includes, it can the share capital. Share capital can be equity share capital, preference share capital, or the any deferred capital, whatever the capital they have raised by issuing the shares to the public or to the owners. Okay. So this shareholders fund will be taken first. Under this, we will have a share capital. This share capital, along with this, we will also have a retained earnings, or we can also say reserves and surplus. Reserves and surplus. What do you mean by reserves? What do you mean by surplus? The amount of profit which is set aside for meeting the future needs called as reserves. See, out of the profit, suppose for example the current year the company has earned a profit of 1 lakh rupees. So out of the profit, whatever is earned, this profit belongs to whom actually? Always this profit belongs to owners, correct? So who are the owners for the company? Shareholders are the owners for the company. For the shareholders, what returns we give? Does the business entire amount of profit will be distributed to the shareholders as a profit? No. So they will keep some amount for meeting future needs, and after keeping some amount for the business, then the remaining will be distributed to the shareholders. So the part of the profit which is distributed to the shareholder is called as dividend. Okay. So after distributing the dividend, say for example out of 1 lakh rupees, 60,000 rupees of dividend is declared by the company. So what about this 40,000 called as I said, this will be kept in the business for meeting the future needs. So this is called as reserves. Okay. So the reserves of 40,000. This is for an example to make you understand, I said. So this 40,000 is called as what? Reserves. So like same way, then what is surplus? See, this surplus is nothing but during the business, whatever the profit they have earned. for the year after distributing everything, if there is after distribution of creating a dividend, after creating a reserve, some portion of 10% of profit will be distributed to the general reserve, and 60% will be distributed to the shareholder as a dividend, and remaining whatever which is kept in the business, that is called as surplus. Okay, so this always surplus and reserves, they both belongs to the shareholders. So we take these two items under the heading shareholders fund, and this is a long-term capital for the business. Okay, and the next item, the second item is, okay, so now the next item is long-term debt, or it is also called as long-term liabilities. So long-term liabilities can be debentures or any long-term debt which is raised from the financial institutions or bank, etc. Okay, so that will be considered as a long-term liabilities. So after taking the long-term liabilities, the next item will be current liabilities. Means these two are the long-term liability, debt and capital, and this is current liability is a short-term capital. Current liabilities. What does this current liabilities includes? Current liabilities can be bank overdraft, creditors, bills payable, any outstanding expenses, or income received in advance. So these are the items of current liabilities. So if you take the total of shareholders fund, long-term liability and the current liability, so this is called as total liabilities, or we can also say total equity and capital. Okay, so as we have considered the liability side, so we will continue further. Since there is no space, I will go for the next page. But the asset side, we will not go and prepare with a separate statement. So the asset side will be continued here only. Like we take assets as a heading here. Okay, so under assets, the first item what we get will be taken. Since there is no space, I will be taking the next page. Okay, so here assets, under assets, first as I mentioned, order of permanence. So long-term assets will be taken first. So the first schedule is long-term assets. Long-term assets can also be called as fixed assets. Okay, so what does this fixed assets includes? Under fixed assets, we will have fixed tangible assets and fixed intangible assets. So what are the fixed tangible assets? Fixed tangible assets can be land and building, plant and machinery, furnitures and fixtures, motor cars. All these are called as tangible assets. And what are the intangible, fixed intangible assets? This intangible assets which includes the intangible assets like goodwill, trademarks, patents, copyrights, all these are called as intangible assets. Why do we divide this? Because of the so many reasons we write it as tangible and intangible assets. Tangible assets we can feel and touch, that can be seen, whereas intangible assets which cannot be seen, where on the tangible assets we calculate the depreciation, whereas on the intangible assets we calculate amortization. But for the income tax purpose, both are one and the same. We calculate depreciation only for both tangible and intangible assets. But for an accounting purpose, as per the accounting standard, we say that depreciation on the fixed tangible assets and amortization on the intangible assets, but both are fixed assets only, long term assets. Okay, so this is the total of fixed asset, and the next item is current assets. Next item is current assets. What does this current assets includes? Current assets are the short-term assets. This includes like debtors, bills receivable, any prepaid expenses, closing stock. All these are the items we will take under the heading current assets. So and also any outstanding income, that will also be considered current assets. So all these are the short-term assets. And the last heading is miscellaneous expenses and losses. Under the miscellaneous expenses and losses, what are the items we will get? If there is any deficit, profit and loss deficit. Deficit means if there is a loss in the business, during the business if there is any loss arised, that is called as deficit. If there is any profit, that is called as surplus, and that surplus belongs to shareholders. So we have taken that under shareholders fund. So you can see that, surplus. So if there is any profit earned during the previous year, that will be called as surplus. That surplus will be taken under the heading shareholders fund, whereas deficit will be taken as miscellaneous expenses and losses. Okay. Next, we will also have preliminary expenses. These are the expenses which are incurred for establishment of the business. Okay, at the time of beginning of the establishment of business, whatever the expenditure incurred, that will be taken as a preliminary expenses. Next, discount on issue of shares or debentures. Discount on issue of shares and debentures. Will be taken. So after taking the total of this is called as total assets. And we also know that always liabilities and assets should get tallied. Here total assets item whatever we get, and total liabilities whatever the amount we get must be same. Okay, so always we say balance sheet, liabilities and assets sides should get tallied. Here also, so there is no changes, as it is like how we were taking in the horizontal format, we also take in the same way to the vertical format, but first liabilities and next assets we will take. There will be no changes in the format. So you can take this as it is, but statement of profit and loss we have to arrange in a systematic order for the purpose. Welcome back, dear students. In the previous class we have discussed about the format of preparation of balance sheet. Today let us analyze one problem to prepare the prepare the balance sheet. So here we have one problem. They have given some information relating to the items of assets as well as liabilities. With this information we need to prepare the balance sheet. Let us discuss. From the following particulars, prepare balance sheet of Adarsh Limited. So here we need to prepare the balance sheet of Adarsh Limited for the year ending as on 31st March 2024. Balance sheet will always be prepared as on that date. So the first item is share capital. Share capital, it is 50,000. So while discussing each and every item, let us analyze whether it is a liabilities or assets. If it is a liability, whether it is a long-term liability or the short-term liability. If it is asset, whether it is a long-term asset called as fixed asset or current asset. Let us analyze then and there only. So share capital, it is 50,000. Since share capital is always a capital liability, so we will take this as a liability under the heading shareholders fund. Okay. Next is inventories. Inventories, it is 13,000. What is inventory means? Inventory is nothing but stock. Where do we take that stock? Stock is an asset for the company always, correct? So we will take this as asset, but if it is asset, which asset? Fixed asset or the current asset is a question. Always stock will be kept not for the longer period, this will be kept for the purpose of resale. So this will be the current asset item. Okay. Next is reserves and surplus. Reserves and surplus 47,000. So what do you mean by reserves and surplus? In the previous class itself we have discussed, reserve is nothing but part of the profit kept aside by the company for meeting the future needs. Surplus means excess of profit earned during the current year. So reserves and surplus is always belongs to the shareholders. So this will be the item of liabilities and it will be shown under the heading shareholders fund. The amount is 47,000. Next, tangible fixed asset. The name itself they have given, it is a fixed asset. So this is asset and it will be shown under the heading fixed asset. The amount is 76,420 and it is a tangible fixed asset. As we have discussed, there is a tangible as well as intangible fixed assets. Always tangible fixed assets subject to depreciation and intangible assets subject to amortization. Next, share application money pending allotment. So there is a amount received from the public, by issue of shares, but still the allotment of share is not yet made. So it is a liability for the company. It is shown under the heading shareholders fund. Liabilities and shown under the heading shareholders fund. The amount is 5,300. Next, current investments. Investment is always an asset. Wherever we invest our fund, so we consider that as an asset for us. So here it is a current investment is nothing but the item of current asset. So which will be shown on the asset side and the heading current asset. Amount is 2,400. Next, long-term borrowings. Borrowings means is always a liability. So this is a liability. So liability is under which heading? Clearly it is specified that it is long-term. Means it is a long-term liability. It will be shown under the heading long-term liability. The amount is 10,000. Next, capital work in progress 5,800. What do you mean by capital work in progress? Whether this is a liability or asset, this is a question. So capital work in progress is nothing but the amount which is invested on the construction of assets. Say for example land and building. So the amount is invested on the construction of building, but still the construction is not yet completed. So we cannot take that as an asset of building directly because still the building is constructed and the building is not yet finished. So that item is called as capital work in progress and it is an asset shown under the heading fixed asset. Next, long-term loans and advances. Look at here, dear friends. Here long-term borrowings nothing but it is a liability, whereas long-term loans and advances is an asset, long-term asset, or it is a fixed asset. Why? Because like how we borrow the fund from the outsider, like same way business or the company can also provide loans to the employees or to the outsiders or to the customers, anybody. The advances are the loans can be provided to anybody from the business, out of the business money. That is called as long-term loans and advances and it is asset. Okay, so this is an asset shown under the heading fixed asset. What is the amount? Amount is 7,340. Next is short-term provision 700. Short-term provision. Short-term means current. Okay, provisions. Provisions, say for example provision for taxation, proposed dividend, provision for dividend, etc. This is a liability not yet paid. The provision is created, so it is called as outstanding, we can say. Okay, provision is created for those items but it is not yet paid. That is called as provisions. So short-term provision nothing but it is a current liability. It is an item of liability and will be shown under the heading current liability. Next is other current assets. They have specifically said it is an other non-current assets. It is a non-current asset. Non-current asset is nothing but it is a fixed asset. It will be shown under the heading fixed asset. It is a asset and shown under the heading fixed asset. Okay. Next is trade receivables. What do you mean by trade receivables? Trade receivables, say for example, we have bills receivable, debtors, etc. So whatever the amount we have to receive from the customers in the form of debtors or bills receivable, that is called as trade receivables. Okay. So this trade receivable is always an item of current asset. It will be shown under the asset side. Next is other current liabilities. So it is any other miscellaneous current liabilities, as it is specifically said, it is shown under the heading current liabilities. Next, cash and cash equivalents. So the cash and cash equivalents, always the cash and cash equivalents is a current asset. Okay, whatever the cash and bank item or any marketable securities can be converted into a cash for a period of when one operating cycle. This is called as cash and cash equivalents. This is always an item of current asset. Next, intangible assets under development. So still, like how capital work in progress they have given, like same way, intangible work in progress. I mean intangible assets, still it is under development. Say for example, any copyrights or the trademarks, they have applied for the government to get copyrights or the trademarks, but still it is under progress or under development. That is called as under development. So this is an intangible fixed asset shown under the heading fixed asset. Next is trade payable. Like how we consider trade receivable as a current asset, in the same manner trade payable will be the current liabilities. Payable means we need to pay to the creditors, to the suppliers. Okay, so here trade payables, which includes creditors or the bills payable to the suppliers or to the creditors. Okay, so this is an item of current liabilities. Next, long-term provisions. Short-term provision, when short-term provision is a current liability, then long-term provision will be non-current liability. So what is this non-current, long-term provision? The provision which we have created for making the payment but still not yet paid for a longer period, that is called as long-term provision. This is an item of long-term liabilities. Next is other current assets. Other current assets, it is 8,300. So it is an item of current asset only. Then other long-term liabilities, this will be shown under long-term liabilities. So these are the items which is given in the problem. So here we need to discuss this. We have discussed this to prepare a balance sheet. We have understood each and every items where it should be shown, under which heading it is to be shown. Okay, let us prepare the balance sheet. Okay, we'll give a heading ASST Limited. We need to prepare a balance sheet of which company? Balance sheet should be prepared for ASST Limited. Let us prepare a balance sheet of ASST Limited as on 31st March 2024. ASST Limited. Okay, balance sheet as on 31st March 2024. What is the format for preparation of balance sheet? Particulars and to amount column. This is particulars. This is amount in rupees and amount in rupees. Let us take this one by one. First item, the first heading is equity and capital. Equity and capital. Under the heading equity and capital, we will have shareholders fund. The first heading is shareholders fund. So the first item is equity and capital. Under equity and capital, we have a heading called shareholders fund. Under shareholders fund, we have the first item is share capital. So it is given in the problem. The amount of share capital is 50,000. So this share capital is an item of shareholders fund. Let us take that first. Shareholders share capital. So amount of share capital is 50,000. Next is inventories. Inventory is an item of current asset. We have taken share capital. Inventory is asset side of the balance sheet. Then reserves and surplus. Of course, reserves and surplus is an item of shareholders fund. So let us take that. Reserves and surplus is 47,000. 47,000. So next item is reserves and surplus. Reserves and surplus 47,000. Next, tangible fixed asset is an item of asset. Share application money pending allotment. So this is also an item of shareholders fund. Let us take that 5,300. Share application money pending allotment. Share application money pending allotment. It is 5,300. 5,300. So there is no other item of shareholders fund. Let us take this to the outer column. It is okay. 1,02,300 is a shareholders fund. And the next heading is long-term liabilities. Long-term liabilities. Under long-term liabilities, what and all items will get? Long-term borrowings, long-term provisions, long-term any other long-term liabilities that will be taken. If there is any debentures, that will be taken under the heading long-term liabilities. Let us see one by one. Current investment asset, long-term borrowings. Yes, this long-term borrowings is an item of current long-term liabilities. The amount is 10,000. So long-term borrowings, 10,000. Next, capital work in progress asset, long-term loans and advances is an asset. Short-term provisions, it is a current liability. Next, other non-current asset, trade receivable asset. Other current liability, it is a current liability item. Cash and cash equivalents, it is a current asset. Then intangible asset under development, it is a fixed asset. Trade payable, current liability. Long-term provisions we have. Long-term provision is nothing but it is a non-current liability. Let us take that. Long-term provisions. What is the amount of long-term provisions? It is 1,000. And lastly, we have other long-term liabilities of 2,000. Other long-term liabilities. 2,000. Total is 13,000. Now, the last heading under equity and capital or the liability side is current liabilities. us take all the items of current liabilities. Here we have taken long-term provisions, long-term liabilities. Let us take the item of current liabilities. Look at what are the current liabilities items are there. See, short-term provisions we have to take. The amount of short-term provisions, it is 700. Short-term provisions, it is 700. Then we have other current liabilities. Other current liabilities 1500. Other current liabilities 1500. Next we have trade payables. Trade payables, it is 2500. Trade payables, always trade payables includes creditors and bills payables. Together we call as trade payables. This trade payables of 2500 is a current liability. Let us take this total. It is 4700. So we have taken all the items on the liability side. If there is any left out, let us look into once again. So inventories, tangible fixed asset, current investment, capital work in progress, long-term loans and advances, non-current assets, cash and cash equivalents, intangible assets under development, other current assets. All these are the asset side. That means we have taken all the liability side of the balance sheet, correct? Let us take the total, and this total is called as total equity and capital. And we can also say total liabilities. Total liabilities. Always this total liabilities should be equal to total assets. Let us take this total of 3 headings. It is 1,10,000. Okay. Sorry, it is 1,20,000. The total is, yes, 1,20,000. The total liabilities, it is 1,20,000. So even the asset side of the balance sheet should also be 1,20,000. We should get that. Let us continue. So we have to continue here only by taking this as assets. But since we do not have a space here, I am going to continue this in the next page. You need not take this in the separate format by writing again particulars, amount in rupees, etc. So we will continue in the same format itself. With the next page I am going to write. Assets. So what comes under assets? First one is fixed asset. The first heading, fixed asset. It can also be called as long-term assets. Long-term assets. Under the assets, we will have tangible fixed assets, intangible fixed assets and long-term investments, etc. Let us take whatever the items they have given. The first one is inventory. It is a current asset. Then tangible fixed asset of 76,420 they have given. It is tangible fixed asset 76,420 rupees. Correct. Next, current investment is an item of current asset. And capital work in progress. Capital work in progress is also tangible fixed asset, but since it is under development, under construction, we will take that as capital work in progress only. Capital work in progress. So this capital work in progress, the amount is 5,800. 5,800. So we have taken tangible fixed asset, then capital work in progress. Then long-term loans and advances is also a long-term assets. Long-term asset is nothing but a fixed asset. Let us take that here only. Long-term advances, it is 7,340. 7,340. Next is other non-current asset. See, non-current asset is nothing but fixed asset only. So, other non-current assets. So, what includes under other non-current assets? Other non-current assets, any other assets which may not be specifically mentioned as tangible fixed asset or intangible fixed asset. Okay. So, this amount is 940 rupees. Next, we have cash and cash equivalents. This is an item of current asset. Intangible assets under development. So, this intangible assets under development is an item of fixed asset only because it is a intangible fixed asset. Intangible assets under development. What is the amount of intangible fixed asset under development? It is 800 rupees. No other items, other current asset is also belongs to the current assets. Let us take these to the outer column, the total of this. It is 91,300. So, this is a total of fixed asset. Okay. Next, we will go for current assets. Current assets. Let us check once the total again. 12, 13, 16, 15, 16, 25, 33, 9. So, let us take the item of current assets. This current assets, whatever the left out items will be the item of current assets now. Let us take those items. Inventories, 13,000. Inventories are the item of current assets. Inventories. It is inventories, it is 13,000. Okay. Next is current investment. Current investment is 2,400. So, current investment is also an item of current asset. Current investment. Current investment, it is 2,400. Next, we have cash and cash equivalents, 1,400. Cash and cash equivalents. It is 1,400. Okay. Next, last item is other current assets. Other current asset, it is 8,300. Other current assets. Okay, finally we have left with one item called trade receivable here. So, the trade receivable of 3,600 should be taken as a current asset item. So, this trade receivables, it is 3,600. We will take the total to the outer column, the total of current assets. If we take the total of current assets, then the total fixed assets and the total current assets total called as total assets should be 1,20,000. Okay, as we have got the total equity capital is 1,20,000, we should also get 1,20,000. Okay, let us take the total. So, 28,700 is a current asset. This 28,700 is a current asset. 91,300 is a fixed asset. Then what is the total assets? Just check the total. So, the total assets must be 1,20,000. Are we getting 1,20,000? Yes, 1,20,000. That means this problem gets tallied. So we have got 1,20,000 on the asset side and also on the liability side. Liability side also we have got how much? 1,20,000 only. Like this we need to prepare the balance sheet. Always asset side of the balance sheet and the liability side of the balance sheet should get tallied. Okay. So this is how we need to prepare the balance sheet. So now let us discuss one more problem which will have both preparation of statement of profit and loss and also the preparation of balance sheet. So combining, even in the examination also, for the purpose of examination, you will get the problem having both preparation of statement of profit and loss and also the balance sheet. So here whatever I have discussed so far from all these days individually to prepare the statement of profit and loss and the balance sheet separately to make you understand how the format should be and where the item should be taken. Okay, in the next class let us discuss about the problem which will have both preparation of statement of profit and loss and the balance sheet. Okay, thank you.